Hello. Just double check. Let me know when you can hear my voice. Okay. Hello.
Hola.
Hola. Hola, Alan. How are you? Thanks for waiting. Appreciate
Oh,
patience.
no worries.
No, absolutely. Apologies. We're just sitting up here, something at the studio or room. Welcome to your session number 2. Intense coaching session. Okay. It's number 2. Okay. Before we start today for your session number 2, intense coaching session in the war room, we're going to go over Open Insider, and we're going to go deep inside everything that you need to know on Open Insider. This is also one of those sessions that you can come back multiple times, so we can see you can see multiple examples that we'll go over, and what exactly I do and other analysts do with it, because this is also information that we use for the Insider Report. And from these, we have picked a lot of 100% returns on the last, almost 4 years now. And also, this is one of the main tools I use initially to pinpoint companies before I go into find the calls. Okay.
Okay.
From yesterday, do you have any questions, any notes, anything that you want to share?
No, not at this time.
Excellent. So I haven't put out the recommendation of FET, mainly because today it was a little bit low liquidity. Okay. But I think by next week, I will put it over as usual. I tend to go on Sunday and put out there the plan that we have for the week. So we already are in the puts. The most important as a note, and I want to have this in black and white. If you buy at 93 cents, okay, that's what you bought, right? Your put.
I believe 94.
Okay, Netflix put, that's 94, okay. Because of this situation, where's the S&P 500 right now? We want to know that. Okay, the stock is trading at 314.40 estimated. And the S&P 500, let's see where we have it. Okay, let's use this chart. Right now, the S&P is at, the high was 3,154, and we're somewhere around 3,031.44. Okay, so you can see that it's sort of start peaking, creating a peak. Okay.
Okay.
You see that now it's moving away a little bit from the upside. And once again on Twitter, we heard the fundamental that the phase 1 deal may be delayed. Also, it's a fact that President Trump signed the support bill for Hong Kong, something which is fundamentally not accepted by China. This for sure will put some pressure. Also, there's some more information, fundamentally speaking, about the VIX, which is the volatility index. And at the current levels, usually we tend to have a retracement between 3 to 5% of the S&P 500. So I don't think we'll get to 5, okay? But at this extension, as you can see, the body candle, do you see the chart right now?
Which
I'm looking at the S&P 500. Are you looking at the same chart I have?
What's the symbol?
Okay, let me show you. 1 second. It must be on your screen. Let me know. Do you see it on the screen?
Yeah.
Okay, so we're talking about this candle. We see how we have this push. I put it in orange. Okay.
Okay.
That means that's the push higher. This may be considered also a pin bar. So right now we have all this opportunity, and it's again another push to the high. And now we're facing this. Let me just zoom this. You see this is starting to react. Push away, move away from the high. The high is 31.54. Right now we're at 31.44, but you can see already that may start retracing and can be this next candle. Initially, what I would love to do next month, okay, is to push to 31, the 3100 level, okay. Usually what you see is that you will see a full body, and then you will have a week like this, and then it push higher for Christmas, okay. Let me see if I can have it. That's gonna be tricky. Okay. You see, I can get the pencil here. So what I would love to see is this: price move at the beginning, first week or first 8 days in December down, and then goes up, and then you have this. You have the full bullish candle. So that's what we have to expect. Now, based on the VIX, we have to expect, and that's what I'm positioning ourselves into this trade, because it's only, as you say, it's a short, as I mentioned, it's a short-term trade, okay? And I'm counting with a 3%, at least a 3% retracement based on what is happening. It could be less, could be more, but that will give us enough fuel for that put to move from 90 cents, why not, back to 229. That's exactly when I saw it the first time. So like I mentioned to other members, I waited before I shared this information with all of you, because also the idea for us is to learn to develop timing. Timing is everything. As I shared with you before, if you pay the wrong price for any asset, it will end up being a bad investment for you. From a car, from a house, everything. Okay. Now, as a rule of thumb, when you're doing this, you bought a 94. Okay. If you're considering going in, I only will do that if by any chance this drops to 45 cents. Okay. Almost 50%. It's a big no to double down at the same price or only with a 10 cent or 20 cent difference. Because it actually creates more risk for you than value. And then you can say, Jose, if I were to double down, I would probably make more. Yeah, if you also double down and then it goes against you, you lose more money. So you have to learn how to balance your position. So basically, what you're looking is, so your first entry is 94 cents. Let's say you buy, for example, for the sake of example, $2,000 in options, 2,000 worth. Okay. So you have probably 20 contracts. Okay. You have 20 contracts here. Then if it drops by any chance to 45, if it does that, then you can say, you know what, rather than 20 contracts now, I want to have 40 contracts. Okay. So now you have 40 contracts with the same $2,000 worth. Here you have 20 contracts. Here you have 40 contracts, but you are investing, in fact, the same amount of money, $2,000. It's just that the price dropped. So you have another $2,000. So you get 40 contracts. Now, the beauty is that if it goes up, by the time it gets to your previous entry, you're already what? 100%. You see? You see? Now you get out. You already made 100% of your money. So you double down this first $2,000. You can hold if you want, but ideally is for learn how to structure your exits. Okay. Now you have the risk on the 20 and 20 contracts. Now the price of the put keeps going up, and then you make another 100%. How much you ended up? 200% of your money in a very structured way, like a professional. Retail, they go all in. They have, let's say they're in the position to invest $20,000. I bet you that they drop 20,000, boom, like a bomb, boom, on the 94. You don't do that.
Yeah.
You have to think like, and this is actually funny talking about like a war. If you go to war and you start shooting, and you drop all your ammo on the enemy, guess what? Now he's gonna fire at you, and you are off ammo. You can't fight.
Yeah.
You will lose the war.
Yeah.
That's what I always say. And focus. This is very important.
Okay.
So it's funny. Sorry, someone is interrupting me. Yeah. Let me see who's interrupting my class. Just close this messenger. So you see why I said no to double down?
Yeah.
No needed. No needed.
Okay.
Don't panic. Just wait for it. Don't do it. Okay.
Okay. Okay.
I see that we are at an extreme level. We have more than 10% up in the S&P. Right now, what we're waiting is for a rotation lower. It doesn't mean that there's going to be a recession. I already shared what Goldman Sachs is posting their views, and I tend to concur with those views. Now, remember one thing: if there's anyone out there that know who's going to be the next president before you vote, it's Goldman Sachs. They know exactly what they're doing.
Yeah.
Exactly what they're doing. They don't fail on that. They're evil. And the reason why they're evil is that they pay good money to their people. They pay good money.
Yeah.
So you
Yeah.
pay good money, you get people that work for you very hard and smart.
Yeah.
That's Goldman
Yeah.
Sachs.
It
So
makes sense.
of course.
Yeah.
And they're not the only ones. If you go and read some of the books from Robert Kiyosaki, he said
Uh-huh.
that I love to pay my brokers, either it's a real estate broker or stock broker, good
Uh-huh.
money, because the better I treat them, the better they will treat me with information for me to trade better. I will
Yeah.
be on the top of the list when they have an idea that will make me money.
Yeah.
It's pretty simple. Okay,
Yeah.
perfect. Now, having get out of the way what we're the structure on when to consider buying or double down. And just one more thing, same with the McDonald's. If the McDonald's were to, and I was expecting somehow that the McDonald's call
Uh-huh.
dropped to 20 cents, I buy
Uh-huh.
more. At 20 cents, I love it.
Yeah.
Why?
Yep.
I was happy to buy a 45. 50% down will be towards 20 cents.
Mm-hmm.
Didn't happen. I'm good with that.
So far, we're still waiting for it to drop some more.
Yeah, the remember the 45 cent when that you got out of that one, right?
Yeah. Yeah. I'm out of that one. But I'm talking about the one with the March expiration.
Mm-hmm. Oh,
Because
yeah, we have time.
because
We
yeah,
have
we have
time.
time.
We have time. We'll look at that later. Now, perfect. Now, let's go to Open Insider. As part of your session number 2, intense coaching session, what you have to always remember that your goal is always to be alert. Trading calls for you to make 100% and 200% is not about being smart. It's about positioning at the right time. Timing is what you need to
Okay.
develop.
Okay.
Timing. What happened with the traditional way of investing in the US, the 401k, all these traditional products, passive investment, which is what of the majority of the mutual fund managers are doing right now, by the way. And the number one reason why we have the returns are so lousy is because they're doing nothing. And yes,
Mm-hmm.
there is this controversial that active management has been lagging and actually underperforming passive trading. But if they were to know about the war room, I don't think so. I don't think everyone would be thinking that passive investment. What happened is
Mm-hmm.
that, believe it or not, for the first time in probably 4 decades, retail traders have so much good technology, so much information, just as the big boys. And
Mm-hmm.
that is giving you the edge. Sly one, but you can make money. So your goal every day is to make sure you check Open Insider. You have the link. I'm going to send it to you, and I'm going to show you the two search that you have to conduct on daily basis, which are the ones that I do. Okay, send you the link to the Telegram. This is very simple. Number one, in front of your screen, you're looking for type of transaction, purchase. You check that. You tick the box.
I don't see it. Are you sharing it?
Let me, okay, here we go. Do you see it now?
Yes.
Okay, so we're Open Insider, and we tick the box. We are going to tick the box, purchase.
Okay, I got it checked.
Then we're gonna use last 3 days.
Okay. Check.
Always, if you, I don't know, Sunday, you feel that you want to do more studies, you want to go around, maybe you feel you want to just explore, okay, you can always go and do a 1 week.
Okay.
And double check everything. Okay.
Yeah.
And the first search I do has everything about $200,000. Okay. Trade K dollar, $200,000. You can always change this to $500,000, but I do prefer to start with 200, so I get everything above $200,000. Why? Because I'm looking for meaningful transactions.
Okay.
I have said this before. If you have Jeff Bezos from Amazon buying 1 share of Amazon, does that make any sense to you?
No.
Do you think that matters? No, it doesn't matter. It doesn't matter at all. So you want to make sure that you are looking for transactions that have value, transactions that you know are going to change or are indicating you that the CEO or any insider knows something that you want to be part of. You don't know what it is, but you want to be part of that. Now, we move to insider title. In insider title, the first search, I'm going to tick 4 boxes: CEO, President, COO, and CFO. Also, at the same time, I will do with this search on the first one, I will do GC. GC, General Counsel. What is that? The lawyer. Okay?
Okay.
Very important.
So add it up?
Add it up, GC. So that will be your first search. 5 insiders: CEO, President, COO, CFO, and GZ, General Counsel.
Okay.
And then we click search. Okay.
Where's the search?
Search is here. Do you see it?
Oh, okay.
Do you see it?
Yes.
Okay, perfect. Now we click search, obviously, because we did that yesterday. We only have the same securities. So what we're going to do right now is we're going to include last 1 week. Okay.
Okay.
We go to date, we tick the box, and we select last 1 week. Okay.
Okay.
Now we click search. Now we have other securities, and we're going to see what securities we're going to take a look at here. We already know about
BH or FET.
FET and BH. Now, there's this security. I want you to take a look at this one. Look at what we have. Okay, we have now NOW, ServiceNow Incorporated, and the CEO, William R. McDermott. It's investing. It's a new brand position. Look at the own section, new. That means that he's buying probably for the first time. And we want to know why. And we have $1 million new position. That's powerful.
That's the one that you're saying that's over 200K, right?
Correct. If you see, we have on the value section, without knowing what securities we're talking about, we have everything above $200,000. You see, we have this one for 228, 361. So we have everything above that $200,000.
Okay.
Very important. Now, in this case, for example, we look at also, we need to know after we see if it matters. The step-by-step here, and I want to let you know, we have it. Let me write it down on the screen. So we have a step-by-step. Okay, so I got my pencil. First is to transaction. Okay?
Okay.
You want purchase.
Purchase. Yeah.
Then you usually can choose the date. The date can be last 3 days
Or
1
1
week.
week.
Then we look for the trade amount. 200,000 a minimum. That's step number 3. This is step number 2. Now, step number 4, the boxes. And initially, you're going to tick 5 boxes. CEO, President, COO, CFO, and General Counsel, GC. And then, finally, step number 5, click search. You got it, okay?
Got it, yep.
Now, what do you do next? This is part 1 of your daily search. Now, part 2, how to study the material. How to study the conclusions. Now, number 1, you're going to look at variations, okay? You're going to look at the variations. This is very important because if someone is buying 1%, does that make sense to you? Do you think that matters?
No.
Okay, so number 1 on part 2, you're going to look for ownership, own, okay? And you look at, and you're going to focus on new.
The new.
Number 1, the new. And then you're going to focus on the highest percentage. Okay?
Okay.
Once you do that on the part 2, then number 2, you're going to define if they are worth your time, because you need to know if the insider has skin in the game. Why? Because here we need to know that there's nothing. If you see that there's nothing, it's good. It's real
That's
money.
a good thing, yeah.
It's a good thing. But if you see the letter D,
the
letter D means derivative. I'm going to write it here. D equals derivatives. And you don't want anything to do with that because the insiders are not risking skin in the game. And
they're probably purchasing options.
Correct. It's an option transaction. As C-level executives in the US, you have a compensation that is a mix between cash and stock options. And they're just taking those stock options, exercising those, and getting common shares. So there's no money. So if they are not risking money, why are you going to risk yours? It doesn't make any sense. Okay, so this is step number 2. Now, once we have 1 and 2, then also, but at that stage is not relevant, you will review step 3. You're going to review the value of the transaction. And then you're going to go to the ticker, step 4. Okay?
Okay.
I repeat, in part 2, first step, number 1 is defining the ownership. Number 1 target for your search is to identify new purchases. Why? And also, you want to identify highest percentage on the purchase. Then you look as to define if it's real skin in the game or it's just a guy exercising an option. So if it doesn't have anything, good, thumbs up. If it doesn't, if it has a D, you don't look at it. Avoid. If you see an M, suspicious, you investigate more. Okay?
Okay.
Because in M means multiple filings, so we need to know what exactly happened there. Now, of course, this BH is something that I don't pay attention because of that. Initially, I will have to do more research, but there are a few that already caught my attention. New, you have this one at 17%. There's something that I want to take a look. And then finally, your step number 5 is to define the title. Why? Because if you have the CEO, you want to know, is this the CEO first purchase? Why he's buying again? Where is the company heading? Okay. Now, after you have that step number 5, step number 6, volume. Okay. I mentioned this. If it drops, if it's an average volume less than 1 million shares, I don't look at it. Okay. I don't look at it. How do you do that? Simple. I'm going to go to the mouse and I want to show you a simple way from Open Insider. You just scroll your mouse to the ticker symbol,
Okay.
and that's it. Look at it. Do you see the weekly volume?
Weekly. Yeah.
Okay, what it reads. Read it to me, please.
Weekly volume 90,850.
Do you want to buy something like that?
No,
It doesn't have.
that's not that. Yeah.
It doesn't have
It
a
does.
million plus.
Yeah.
Have nothing. I don't want to participate in any company like that. It's
Okay.
thinly traded, and if it's hard to get in, it would be difficult to get out. Okay.
Okay.
Now,
Okay.
FET. Remember FET? We discussed it yesterday on the first intense coaching session in the war room for you.
Yeah. Yeah.
Read me the weekly volume. What weekly volume are we looking at?
It's 4,705,346.
There's some action happening here. A lot of action. I want to be part of that. Of course, by the time you get to this volume identification, you already conducted your entire process. Make sense?
Makes sense.
So by the time you are finally checking, just double checking the volume, you already have an interest in that position. But if the volume fails, you pass. It doesn't matter. It doesn't matter that you tick all the boxes previously. Now. What is the weekly volume?
For now, it's 6,914,810.
That's highly traded. If this is something that I'm looking at, it's finally ticking all the boxes. And I want to take a look at that. It's 6.9, almost 7 million shares traded. There's something in there.
Yeah.
Look at BH, same case.
Same.
Yeah. And PED, what do you see?
209,700.
I don't want to do anything with it. That's
Yeah.
it. So from all the search conducted, part 1, part 2, there are only 2 candidates. That will be noun, and that will be FET. Now, see that the characteristics from the very beginning, ServiceNow, ticker symbol NOW, tick the boxes. It was a new purchase. The value was above $1 million. We're talking about the CEO. And when you look at to the left, it's
blank,
skin in the game. Also, if you look at FET, Forum Energy Technologies, same process. Ownership was plus 17%. That's a lot. Then we look into the value of the trade. That's $400,000. We review if it's skin in the game or it was just a derivative. No, it's actually skin in the game. And then we look at the title. It's the CEO. Okay, the CEO.
Yeah.
Also, COB, Chairman of the Board, which is a fancy title, but okay, good for him. I don't think he's getting extra for that, but fine. And then we tick the box. We check the last step, volume. All good. And that's what you want. So once you have all that, that's the winner. That's what you want to explore. After that, so we have part 1, part 2. Do you have that? That makes sense?
It makes sense.
Any questions about the part 1 and part 2 process?
No, not at all.
Perfect. Remember, all the time you can come back and review this intense coaching session that you have. We'll have the video. We'll have it today for you. And remember, all these videos are unlisted. So I will be creating them for you only. Okay?
Okay.
So,
perfect.
Yeah. So they're for you only. And very important. Once we have all that, then we start exploring. So you can have that on your watch list right away. And then is when we start working on the charts. But now we have the fundamental value that there is volume, there is insiders, something is happening. We want to be part of that. Now I'm going to clear all drawings. And the second search that I do all the time to help myself is that, I'll bring the pencil. Okay, bring back my pencil. Okay, the second search, and I do this to have a little bit of organization and structure when I'm working with this, is You have everything as usual, and then you untick the boxes.
Oh, okay.
Okay, now we're going to do officer. No, we're going to do VP, director, 10% owner, and other. Okay?
Okay.
So the first one, it was about C-level executives, including the GC, general counsel. Okay? The lawyer.
Okay.
The lawyer is very important. Keep something in mind. Do you remember I don't know if you ever watched the show. I don't know. I think it was, I can't remember the cable the channel, but the TV show Suits.
Oh, yeah.
Okay, so Harry Specter, he was at the top of his career,
Yeah.
and his base or his buy-in to be a part of the board with the big boys is $500,000. We're talking that, I mean, they're pretending to be big boys, big lawyers from New York, but the billables, they charge per hour, sometimes $400, $1,000 per hour, so that he makes the extra money. But usually these lawyers, his base salary, it's somewhere between 100 to, let's say, $500,000. So when you see, yeah, the big boys, big boys.
Yeah.
So when you see a lawyer, but not all the lawyers make that money. So the point
Half a million, like $500,000, like annual.
Annual, yes, yeah.
Okay.
Yeah, but not all the lawyers make that money. So when you see the general counsel investing, the lawyer of the company, keep in mind, for that guy, that's a lot of money.
Okay.
So if you see a general counsel investing $200,000, $300,000, that's a sure win because that guy knows.
That guy,
yeah. He's not going to invest almost 75% of his annual salary just because he likes you. No. Doesn't work that way. Okay, now we have a couple more minutes. On search number 2, we have VP, Vice President, Director, 10% owner, and others. And then we keep all the same. And now we're going to click search. And see, voila. Look,
that's a lot.
Yeah, it's work. You have to work. You see? And a couple things we notice right away. Okay. What do you notice to the left? There are a couple D's.
Yeah.
Okay? As soon as I see a D, as soon as I see that, let me use.
Avoid them.
Exactly. As soon as I see that, this is pra, ha.
Filter them out.
Yeah, you take them out. It actually is funny because they don't have a filter on this column that you can eliminate them.
Okay.
But it's just with the you know that you don't have to look at it. I mean, I'm not interested in this company. Just crash it.
Yeah,
okay?
but since we have a lot of the blank boxes, and we can afford to avoid the M's as well.
Absolutely. That's a very good question. Very good thing to point out. You highlighted something that's very important. Those are the premium ones. Now, remember, I already removed the D's. You have the D's there, derivatives. Then the M. Don't pay attention to the M, not yet.
Yeah.
The A also. It's, remember, amended filing. It's very tricky. You need to investigate a little bit more. But then again, look at this. You have the A, and if you look at the ownership, 0%, only $232,000.
Yeah.
You can do better. You can find better opportunities. You see?
It looks fishy.
Exactly. You see right away, you're like, it looks fishy. This company, not interested. Now, once we have that and we eliminated these, now on this search, I can right away start looking at potential big players. Look at this one right away, new. Remember?
Right.
You see new. Those are the ones that you have to target first. So we have 3 news here, okay? And look at the first new. This is for you to look over the weekend. Who is the winner here? Expedia Group. And Expedia, we both know, is a big name. So you want to know why that Expedia is on this list. You want to know what's happening with the company. So right away, I look at the volume. The volume is 8.4 million. But look also at the chart. Look at what happened. Expedia dropped from almost 140 all the way to right now. He bought at 98. It's climbing a little bit more. But why is going up? It's going up because the market was trading up. So that's why. Now we need to study more Expedia. So Expedia will be our study case for your training session number 3 for tomorrow. Okay?
Okay.
We're going to go deep into this one because I want to know why Expedia is here. And look, he's buying, as a new purchase, this director is buying almost $2 million. Why? Let me ask you, why you think if a company goes from $140 to $98, why you will buy $2 million of your money?
Right. He knows something.
He knows something. He knows that whatever happened today won't be tomorrow. And that the value of Expedia is there. Now, I can tell you right away, this will be something for us to start tomorrow, is once I see this is when I want to know exactly what are the calls available. Where's the liquidity? Where's the call, the options market telling us that Expedia may not go in the next 4 months?
That's when you go to old NASDAQ.
Correct. That's when I start hunting down the best calls for you guys. And that's what I do, especially this company, because if you took a look at looking at the chart, just to close this session, just to look at the chart, you see that little blip? That's a dead cat. I can see the little blip. It comes, he bought a 98, but you see that there are like two bullish bars at the end, ticking to 105.
Yeah.
I know if the S&P goes down 3% or 5%, that thing is going to go below 98. Because it's going to be a continuation of the sell-off.
The one at the very right.
Yeah, the very right. Okay, you see that little thing there?
Yeah.
That will turn.
Those two candles that are colorless. Yeah.
Correct, because those are those right there. The next one will be bearish, because this is a sell, and it broke also like a long-term support. I can see there's a support at 110 just by looking at the information right now.
Yeah.
We will work on the chart tomorrow. Exactly. And I can have it on my desk, and I can have this information of knowing that the insider bought a 98. So also what I want to do is, whenever it's possible, I want to have a better entry than the insider. Make sense?
Yeah, makes sense.
So as a guidance. So this is our study case for tomorrow. Why Expedia is here. What is happening? Where's the option markets? This is something that we want to look at, because after a 3% decline in the S&P 500, Expedia is a buy. And moreover, I want to buy the calls. I want to know exactly where this can go. So I will tell you right away, this will be extremely attractive if it drops to 91. If it drops to 91, we can be looking at getting some calls at 100 or maybe 95.
Yeah, this can be a candidate right beside FET.
Absolutely. But this one will take more time because it's a bigger company. FET, Forum Technologies, can pop at any time, because remember, it's a company that is below $5.
So we'll trade that first, the FET.
Exactly. Absolutely.
Yeah.
Okay. So for today, we're gonna leave it here. This is the introduction. We will touch on the 4th session. Once again, we're gonna review concepts. We're gonna come back on Monday to Open Insider. Probably have 2 more sessions to master Open Insider. And as you can see, just from this free tool, all the quality information that you can get. Okay?
Yeah.
Session is about to end. It's going to get cut. So I want to thank you for participating on your 2nd training session. I hope you like the information you are receiving so far. Prepare all questions. Go over this. I will have the video later. And tomorrow we go at this again. Okay? Our case study for tomorrow, Expedia. Okay?
Tracking.
Perfect. Thank you, Alan. Appreciate it. Talk to you tomorrow.
Okay. Thank you, Jose.